Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that sideways action on the Bitcoin chart and just do kind of a crypto quickie update. Guys, if we do just jump straight to the charts, you can see that, of course, that head and shoulders that I was warning about for several weeks actually did end up playing out. Of course, we also got that falling wedge that did have a measured move to the upside. It's just we weren't able to hold the key level that we needed to hold in order to continue bullishly. And so what happened, of course, we got rejected. That put in the right side shoulder. And that's why we just kind of fell to hell after we broke the neckline of that head and shoulders somewhere around 28,000. And you can see that the measured move almost perfectly accounted for where we're at on the chart currently. So although I'm not the strongest on emphasizing patterns, first of all, of course, everything is price action and price action is king. And so, of course, we just have to take it one level at a time. Now, the next level that we're looking at is, of course, that $25,000 level, 24,700. If we lose that, then we could be talking about significantly lower prices, perhaps in the low 20s range. And if we do break below 25,000, I will keep you abreast of that. Now, guys, of course, I told you I'm not particularly bearish at the moment as long as we do hold above 25,000. I do think that there is an opportunity for us to be putting in a low here, and I'm still looking at taking out some of this liquidity over here around 27,200 to 27,700. And of course, if we want to regain any chance at bullishness, we really do need to take back that that $28,000 level, which of course was where we started to break down from significantly. And if we can take back $28,000, dollars, then in order to validate and confirm, pardon me, our bullishness, we would need to take back 29,300. That would put the bull market firmly back on track. Now, as long as we're under 28,000, we're basically just doing a retest of the breakdown from the mini bull market that we had this year. Now, guys, we did push up fairly significantly on Bitcoin, but altcoins really haven't had their run yet. So, if there is a chance for altcoins to catch up, then maybe Bitcoin could just go sideways or a little bit of pumpiness. And, maybe it's just boring for a year and, things just don't do much of anything until the next, a boom time. But guys, right now we're just really looking at two levels, 25,000 and 28,000. And if you're very conservative, then of course you'll want a confirmation at 29,300 or a solid breakdown under that 24,700-ish area. Now, if we do just zoom in on the day here, you can see that we are pushing through the daily alpha momentum pool. Guys, of course, I do have this strategy where we do get a bias on volatility and on momentum. Now, since we've been pushing sideways, it's not the clearest picture. We're just kind of ranging sideways, which means we have very little momentum in either direction. And volatility has also been extremely compressed. So there just hasn't been much to say. However, if we do get above the daily volatility pivot, above 26,233, and above the momentum pool here at 26,195, then we'll be above the pool, above the pivot, and that could give us a good chance at approaching to take out that bearish control zone at 26,708. You can see that we were rejected in that area our first attempt to break through. So, maybe second time's a charm. Who knows? We can just conquer that bearish control zone, pull ourselves out, and then maybe try to attack the neutral point of control next. Now, that neutral point of control is around 27,694. And so, of course, if we do take that out, that's going to give us that best chance to re-enter the bull market above 28,000 to 29,000 there. Of course, that's neither here nor there right now. We are just looking at trying to pull ourselves out of the bearish control zone on the daily. Now, if we do lose the pool, that would be under 26,000. $10, and of course we have a little buffer room on the MACD on the daily to 25,871, but under that little wiggle room area here where you can see all these wicks, then our bias would be to the downside, and we might just retest these lows that we've been putting in somewhere in the the low 25,000s, if not even losing our footing. So we have to be very careful if this happens, and the reason for that is that our volatility will give us a bias to the downside, and our volatility is building up. That is, the potential for us to have a big move is starting to build up. So although we still look like we're resetting a bit, should this EMA on our volatility coming down to meet the actual volatility line itself, there's a good chance that we could just have some type of a push through. Now, this push right here is actually suggesting consolidation. So when we get a kind of a pinch like what we have right here, then that will suggest that the move on the daily is ready, something like over here. And we don't know exactly when that's going to happen. Could take a couple more days, take a couple more attempts at pushing either up at that bearish control zone or down at our lows. But we do have to watch this carefully. Just in the current orientation on the daily, we are just consolidating, but those things can sometimes move quite quickly. Additionally, you'll want to see that we do have, you'll want to notice that we do have this, kind of bullish look on the RSI right now, but we are headed into the 50%, and that's often a kind of a rejection area where we do get maybe pardon me, a pullback, or if we do bust through, this thing could just skyrocket, okay, kind of like over here. So got a couple drives of bullish divergence, which is really on watch today and over the next couple days for something tricky that might happen, and that's why it's very important to pay attention to this key level of 26,233 on the daily. We'll want to be above it. Okay, for our best opportunity, we'll want to be above it, and if we are below 26,000, then that's also going to be you know a bad sign. Okay, so 26,233, good. Underneath 26,000, bad in terms of our bias, and that's how simple it is, guys. Okay, we really don't reacquire our energy on this chart until we get back above that 28,000 point. That suggests the intensity of the move to the upside, which you can see, previously we were pushing to the upside, and so if we want to recapture that intensity, that's 28,000, and underneath there we're just very weak, and especially if we're below the bearish control zone, we are just very weak. Guys, let's go ahead and throw on the 6-hour here. And on the 6-hour chart, you can see that we actually did end up pulling ourselves out of that bearish control zone. And currently, our volatility pivot on the 6-hour is underneath us pretty significantly at 25,935. Just showing how that upper 25,000 is really being used as support right now. Of course, we could tag back there, but as long as we hold above 25,935, just like on the daily, our bias, is still going to be at least somewhat secure in that daily pool and above that volatility pivot. We don't want to break underneath there. And on the 6-hour, which is a shorter time period than the daily, basically intraday trading, we don't want to get below that 25,903. Otherwise, that could suggest that we're going to really tackle those lows or potentially be having a failed chart here. Now, one of the cool things is on the 6-hour is that neutral point of control is very close to us. And we are currently squeezing against the Bollinger Band's midline there. So if we are able to get above that Bollinger Band's midline and we're able to recapture the neutral point of control, we really do have a good opportunity to try to squeeze towards that mid $26,000 area where we have a historical range that could bring us to that 27,500 over a couple periods of time there. Of course, we do want to maintain our momentum above this $26,050 level, and we're just very weak, basically going backwards if we're underneath 26,050, but we do have a little bit of a buffer room, just like on the daily, all the way to that $26,000 level. And of course, the neutral point of control here is 26,250. So where our strength starts to be putting in on the daily is where our neutral bias flips bullish on the 6 hour, just giving us a little bit of a front run if you're trading on an intraday basis. Okay, so I am looking forward to potentially capturing that neutral point of control on the 6 hour as long as this squeeze continues. If we throw on our EMAs, you can see this is a proper squeeze here where we do have the 21 and the 9 EMA looking like it wants to pop. Okay, now this isn't the strongest signal, and there is the opportunity for it to just kind of check back here or something, but this is a proper squeeze, and we did see the same thing over here when we did push against that bullish control zone on the 6 hour previously around 26,700. Now, if this is a second attempt, then we really do gain some energy around 26,625-ish, and above 26,721 we will be in the bullish control zone on the 6 hour. And you can see that we do have these 800 EMAs around 27,250, just again signifying this could be a tough nut to crack on our first go, but we might have the opportunity to grab some liquidity up there. But these big daddy EMAs, okay, like this 800 EMA, you can see we get some pretty solid bounces off of that. So it may not be the first go that we break through it. And I just want to keep you aware that there is a pretty significant EMA in that area around 27,250-ish to 27,300-ish. And then we also have other big daddy EMAs, basically the 300, the 200, both the EMAs and the SMAs around 28,300 and then around 29,000. So we definitely have our work cut out for us. We have these EMAs that tend to be hard limits and rejection areas that give pushback on the chart, suggesting that yes, this could be a corrective move, but it might take more time to really just secure that area and lock it down to re-enter the bull market. Now, if we do end up putting in a solid squeeze that pushes through these EMAs, when you do push through these EMAs, you do get fairly powerful moves, and you can see when we broke down from the 200 and the 300 up here on the 6 hour. Well, I mean, just look how we pushed to the downside. Same thing can happen to the upside. Basically, just imagine this pushing to the upside, and that's what could happen if we do get a squeeze through them. You can see how many attempts it took to push through the 200 and the 300 up here. It took from 722 all the way to essentially 816. So, almost a month, and we've only gone for, basically, 1 week in our current position, our current level over here. So could it take more time? Yeah, absolutely. Could it take a couple swipes? Yeah, absolutely. But currently, as long as we're above 26,000, I'm still looking to the upside, and it's only if we get below 25,000 that I'm starting to look to the downside. So guys, yeah, that's my position on the market here. And if we do look at the the 6 hour, again, we have that historical range somewhere around 27,500. If we look at the daily, it could bring us all the way back to 29,000 if we do get that push up. But of course, on the downside here, we also have that push down to 25,000. So we could easily check back to our lows or check back to our highs on the daily. And, we would just be stuck in a range that would be expected here. Let's see, what do I want to go over anything? Let's see, on the daily here. Yeah, I mean, we did go over the RSI. That was actually on the 6 hour, but here on the daily chart proper, you can see that we are still in the bearish control zone, and we do have a chance to essentially cross the EMA on the RSI and take a swipe at our bearish control zone to see if we can push out. See if we can find an example of this. Yeah, right here we had a very similar setup where we did cross the EMA, checked back to it, and then we just pushed the heck out of there. Same thing right here, same thing right here. And so we are starting to get that look on the chart where if we are able to cross that EMA, maybe the first attempt's not going to work. Maybe we pull back, sit on the EMA, and then we launch off of it on the daily. Let's go ahead and take a look. You can see that the jewel is giving some type of a bullish signal. Now that can be a fake out. You can have a deep, deep, deep retracement before this thing actually takes off. So don't be fooled by this signal here. You can see, of course, that we did have a drive down on our uh, on our volatility here, where this volatility essentially pushed us down. We did cross. Now we're just consolidating, and the day suggests that we could consolidate for a significant amount of time. Okay, so we've just begun to consolidate. If you look at the daily, do we get a flip in this area and push up again, and then continue our consolidation sideways? Maybe it's possible, but in the current orientation, it looks like the day just wants to continue to consolidate. And so, again, if we just went sideways for a month, that wouldn't be unexpected. If we look at our stochastic, you can see we are at pretty low levels with a slight bearish, orientation there. So nothing to write home about. I wouldn't make too much of this until we get a stronger positive signal. But again, let's compare it to the 6 hour, and you can see that the 6 hour is starting to push up and that we are starting to reach a maximum on our volatility contraction on the stochastic there. So should this come down to the blue area on the 6 hour here while we're pushed up into the in an upward kind of position, then I would expect the 6 hour to at least make that effort to continue. This episode is getting a little bit longer than I'd like it to be, but just wanted to point out that on the 6 hour, we also have that kind of bullish signal on the jewel there, where if we do continue to go sideways and basically hold these lows, there is a good chance that we do get that reversion. One thing that I want to point out that probably nobody is going to talk about is the 10-hour volatility that we have going on here. Pardon me on this angle here, but essentially what we're looking at here is the most amount of contracted volatility that we've ever had on the 10-day period. We've never seen this before in the history of Bitcoin. So what does that mean? If this thing crosses and we have a bearish orientation on the 10-day, then perhaps we could get, skyrocketed to the downside. If this signal holds and we have a bullish orientation, maybe we're going to skyrocket to the upside on Bitcoin. Okay, guys, but let's just take a look at what's going on in the 10-day. Well, it's going to close in 1 day and 10 hours. Now, no one really looks at the 10-day, but the 5-day is a very popular time frame, and of course, that's 10 days is just the 2 times multiple of the 5-day. So I don't think that we can just sneeze at this signal. If we do look at the Joule, the oscillators here on the 10-day, we do have that bearish orientation, which would suggest greater continuation to the downside, even if those lower time frames, try to push up a little bit. If they get rejected by those big daddy EMAs, then the 10-day could just continue its signal, that massive signal to the downside, and perhaps we have a higher low put in, but maybe that could be a pretty bearish signal that's being formed here. I just want to keep you guys realistic because the rest of this episode was bullish, but we do have some things that we have to watch out for on these higher time frames. And additionally, if we look at the stochastic on the 10-day here, you can see that we are just mid-fall. Now, the middle of the chart can be a place where we bounce. You see that we've done it before, and so there is the opportunity for the 6-hour and the day to just kind of push into something that does turn this around. But just in its current look, taken just by itself, this would suggest continuation to the downside. And again, perhaps the strongest continuation that we've ever seen, in the history of this asset. So what happens next is going to be very important for this chart. And again, like that, the 10-day is conceivably a stronger signal than the weekly. Okay, and the weekly is a very powerful signal. Yeah, so really capturing 28,000 should be on our mind quite strongly. If we look at the RSI on the 10-day, you can see that we did break down underneath the neutral point of control, which suggests that bears are now being put in charge on the 10-day. And when that has happened before, we did get a little bit of a bounce, again, suggesting that maybe, the 6-hour and the daily and whatnot could push us up a bit, but it did continue to break down and then retest the bearish control zone. And that's happened time, a little bounce and then retest the bearish, little bounce and then kind of come down here, retest the bearish area. That's happened time and time again, and there's not too many instances of it because this has been a very powerful, broad signal in the past. But when it's happened, we have come back to retest the lows. Now, as long as we were holding above the neutral point of control on the RSI on the 10-day, we did explore the bullish control zone. It's just we're not doing that right now. We had that chance, and we got a little double top that we got rejected from. So yeah, stay frosty, Alpha Fam. Okay, and guys, you're doing a great job in the Discord. Link is in the description of the video below. We've just been going over all sorts of different charts. We've been going over the macro. Please join the conversation in the Discord. It's free, and you're welcome to join. And guys, I want to, try to improve that Discord over time, and in the future, maybe we'll monetize it or something. But right now, it is free, so please take advantage of it in this bear market. And if we come back to a bull market and everyone's making money, then of course, it needs to be worth my time, and we can make some decisions at that point. But my whole goal during the last 2 years have just been to protect the Alpha Fam. Of course, we called the top turnaround somewhere around the $60,000 area. We did buy in around here, around this kind of 35 to 30 area. We did tell everyone to get out around this 40 to $45,000 area, and then of course we've just been bearish ever since. At which point the Alpha Fam did take some risk around 16,000 and 17,000, and then we've been looking for top signals up here. We did have our breakdown around 28,000, and so again, I'm still just trying to protect the Alpha Fam while we have that kind of winding setup for potentially the next bull market. And this is a bit of a mid-cycle rally. We don't know if it's going to be turning directly into the next bull market. Could have a little bit of sideways action for, could be anything, could be 3 months, could be a year. We just have to play it by ear. but we do expect some type of mean reversion to the upside at some point. This thing's just not going to just completely die all at once. There will be bounces. And of course, if companies like BlackRock start just accumulating Bitcoin, then there could be also a massive bull run, even if the rest of the market wants to be bearish. Sometimes just life intervenes, and so we just have to be ready for both cases. Could we drop down to the 20s? Could we even retest our lows here? Um, could we have a flash wick or something in a crisis down to that 10K area? Yeah, all of these things are possible. But at the same time, could we recapture 28,000? Could we recapture 29,000 and push up to the high 30s, maybe low 40s, maybe even this kind of $50,000 area where we have liquidity around 35, we have liquidity around 50? Yeah, I mean, absolutely. These things could happen, or could we just go sideways, right, in a very, very boring time until suddenly we just go on a monster bull run and take out our highs? I mean, that could also happen. I'm not trying to be a fortune teller. I'm just trying to play it by ear day by day and give you the levels that you need to be as successful as you can in your trading. And so please, again, consider to join the Discord. We do go over hourly, we do go over 4 hour, 6 hour, various different time frames, and on the coins that you may be interested in. For example, Solana or Optimism OP. Guys, if I take a look at some of the charts that we've been looking at, for example, Cadena, right? I was predicting when Cadena was at $1, I was predicting that Cadena would drop down to essentially 40 to 50 cents, and that's exactly where we ended up. And then we had a massive 30% spike. Again, I didn't draw these lines here. I drew these lines back here in March earlier this year. And guys, we just had a massive reaction off of my key level. So it does pay attention. It does pay to pay attention in the Discord and just be open-minded to what could happen. Both this head and shoulders and this head and shoulders suggested this key level. And again, Cadena got a massive, actually 45% reaction off of that. If we look at other ones like OP, right? We had these setups, and just a little bit of money every single day, but we were able to catch this 2% move, this 5% move, the 6% move, and then of course this breakdown here. If we look at Solana, same thing. We had this pool where we had a nice push off of it, and then we got a nice 8% move. We ended up breaking down. You can see that we're actually pushing off the pool again for a 3% move, and so again, like these little bits of money do add up over time, and as long as you're good with your risk management and you respect the rules, which I do outline, then you should just absolutely kill it, Alpha Fam. It's going to be your alpha for the day. Stay safe and happy trading.